everybody in level one, the first thing I ask people to do is your 1, 2, 3s. So on your chart, I want you guys to write down what direction trend is, then determine what your bias is, and then what are price cycles. Okay, current price cycles. This is current market. So this is every single person needs to do this before you even start trading, right? Is this 1, 2, 3 trend, bias, price cycle. But what I want you guys to do is to write it down on your chart, right? So, so do 1, 2, and 3, and then answer those 3 questions. Like, what's the market doing? Okay, so that's the first step. So determine that thing is your first step before you even start placing a trade. And the next thing that I want you to do after that is to identify where the action points are, right? Where support and resistance is on your chart. So where support and resistance is on your chart, and draw on your chart. The next thing that I want you to do after that is look for where's your normal box of trading and where's your light areas. Once you get to this point on your chart, take a picture and you've passed level 1, because these are your pre-trade setups. These will help you when you start trading. So level 1 is all about pre-trade setups. Okay. So every single person should be able to do this. As a level 1, you should be able to have be able to identify what your pre-trade setups are. That's your level 1 challenge, is a pre-trade setup. Level 2, if you want to take it a little bit further, level 2 is to identify a chart pattern. Okay, identify a chart pattern that is one in the past, and then identify one in real time, and you trade it. So you call it out and you identify it before it happens. Any questions on the challenge today? So level 1 is pre-trade setup. Level 2 is look for a chart pattern and trade it, or give me the reasons why you're not trading it. And those can be both really good challenges, because you could see it and either you're going to take it or you're not, and have an idea of why you did and why you didn't. And if you fell, so let's say you take it, you think it's a pennant, you take it, and then it turns out to be not a pennant, then then you got to figure out why. Why did you take the pennant, and then why did it fail? Right? So those are your things. So this is a 2-part challenge. Thank you, Khalid, for being a volunteering. I appreciate it.
Can you hear me?
Got you now.
Okay, thank you. All right. The first assignment is to determine what the trend is. And I mean, the overall trend is up, of course, but the current trend, like on the 5-minute chart, it's basically I would say it's still up on the 5-minute. We do have that channel. We do have that channel down, but it seems to be still. I mean, it's really confusing to me. But I would think the trend is still up. However, we are overextended on the 5-minute chart, so I would feel more comfortable being a seller. So price cycles are large at this time. I mean, you're looking at 13.
The only thing I would add to that, Khalid, is that we did get a break here, and if it finds support here, we could see it try to test the top. That's the only thing I would say. is that you want to be cognizant of that too, because it could break that channel structure if it decides to hang out above this line right there. That's the only thing that I would be cognizant of.
Well, I mean, if I understand what you're saying is if it fails to break this line here, then most likely it's going to try to go back and test the top. And when you say the top, you mean the top of the 5 minute, this candle, or all the way up?
All the way up to here.
Okay.
Because you can see it kind of that.
I mean, if we consider this to be a price cycle here, these are like sixes and eights. So we are, you know, this could count as a 2 price cycle.
Mm-hmm.
So now it's breaking down, but that's, you know, still early on the candle.
Right.
You know, I think at this point here, that's, you know, if I let me see if I can draw here. Yeah, I can. I mean, this is our action point, right?
Mm-hmm.
So if I were to buy, I would buy here. But if it breaks this, then, you know, you could go for a quick, you know, 2 pip down. If it breaks here, if it closes below this line, if it doesn't, you know, like here, you know, you know, I'm kind of like looking, maybe I should buy, you know, which, you know, let's just throw a buy in and see what happens.
Well, let's stick to the challenge. Let's identify the 1, 2s, and 3s really quick, and then let's draw on your chart where your support and resistance areas are, or your action points. Then,
well, this is the action point.
mm-hmm.
This is one action point. The next action point would be this line here.
Sure.
And of course, you know, if it passes this point here and goes beyond it, then it will be a good time to maybe fade it if it's early candle. Like if it goes fast and early, maybe you could fade it to go back and retest this line. This is if it's steadily and slowly going up, then I wouldn't. It'd be a good thing maybe to have a runners right around if it crosses this line, maybe to have a buy or 2, so that if it breaks, we could see a little run.
So let's go back to the challenge real fast. Let's answer the questions. What's 1? What's 2? I'm going to change the color so I don't. What's 1, 2, and 3? So
I forgot what 1, 2, and 3 questions were.
The 1 is what is the trend? 2 is what is your bias? And 3, what are price cycles?
Oh my gosh.
Yeah. Well, I don't have a bias. It's in a place where it's it could go up and it could go down. This 1 minute based on this action here, it's either or. Like if it passes this point, then I would be a buyer until that line. But if it doesn't, if it fails, like it's doing now, it's failing, and if it fails again and it makes a bunch of wicks and comes down, then I would be more inclined to sell. So I don't have a clear bias at this minute.
Okay, well, let's go back to number 1. What's trend? What do you think? What do you think trend is?
The trend is up.
Okay, let's pull back your 5 minute chart, your 5 minute view, and this is where you get your overall trend, right? So excluding that news event, like if you were just to look into really this right here, what's trend, right?
It's flat.
It's kind of going. So then you got to come in and look and see what's the current trend right now. The current trend, just for a little bit of a run, obviously all day it's kind of ran down in that channel. Now is the structure of this channel breaking, and is it going up? That's the question that you need to ask yourself. Has this downtrend that we've been in all morning long now changing its structure? Remember that when we first came in and started trading, I said I was going to look for a couple things. I was going to look for it to break below here because we could get a run. We did, but I would have thought it would have come down to here before. But then the other thing was, if it changes here and trades up here, you could also get a market structure change. And so we're right on the test of this market structure. So it's testing to see if it wants to change. And if we get confirmation of that test, would be that it fails to come back below here, consolidates here for a little bit, and then continues to go up. So for me, I would be looking at that as my personal bias, where I think it's going to try to move higher and play up into these ranges, right? And play up into here. So to me, that would be my bias, and that's what I'd be looking for. And then I'd also know where that fails. So the moment that bias fails and it's no longer a valid theory is probably if it trades below this line and goes back and tests the bottom of that, right? So if it trades below this, could mean that it's coming all the way down there. So these are all part of a pre-trade setup, like right before you get in and trade. Before you take any trades, you need to look and see, okay, trend has been down for a while. It's now starting to go up. What is my bias? And inside of a bias, do I need to have a plan A and a plan B? And so I always do that. Like, okay, if it does this, then I'm a buyer. If it comes down here, then I'm a seller, right? And that's kind of where the market structure changes. So if the market structure changes, shouldn't your bias change as well? And so by identifying where that changes, helps us to not get so stuck to one side or the other, right? Yeah. And so this is so important to do during a pre-trade setup. And that's why this is a level 1 technique, because we're not placing any trades, but we're getting our mind right before we start placing trades. Does that make sense, Khalid?
Does it mean that when your bias is one direction, that would be your plan A, and you would have a plan B if your bias is changing?
Correct. So when and where the market structure changes also shifts my bias. Now,
what do you think about the overextended, like the 5 minute? We are on a second price cycle on the 5 minute technically, and it's overextended. Wouldn't be easier to fix the sells than the buys?
So let's go back and look at price cycles again. So go back and look at the price cycles, and let's measure what are the last few price cycles here.
Oh, in the 1 minute chart, they seem to be around, well, this is 6 and 7.
And how long?
Oh,
4 minutes.
Like 4 or 5 candles.
And so if you hold that, then what are we in currently right now?
Well, we're on an upcycle, so we're
end of it.
We're at the end of it, right?
Yeah, the end of it. So
so our price cycles have dramatically shrunk in this consolidation phase right here that it's in.
Right.
Right. And so how does that have any bearing? How does that have any bearing on how we trade right this second?
Well, first, it seems that the momentum to the long side is slowing down. And, the 5-minute might actually fail to break the top and proceed. I don't see the momentum is shrinking. Now we're going more like in a consolidation area where you would start looking at the maybe hints of the wicks where the pressure seems to be more building. So, it is creating a pennant, like you said.
Sure.
And that pennant is gonna break both on the 1 minute and on the 5-minute chart.
Good. That's good that you spot that for sure. Okay, so back to the one, we have identified a trend. Now, price cycle is what we want to do, and this kind of goes to Joseph's comment. Like he says, you should use price leg. It's just price and time cycle is really what it is. How far does it move, and how fast does it move in that direction, right? And so that's why I call them price cycles. It's because how long does it move? And if it's coming into, like you said, could be a pennant here, could pop. What direction would you trade that pennant? And would you take that?
Well, a pennant is, has to, this is the top point, that's the low point on the 5-minute charts. And if it breaks either one, most likely it's going to break down more or less the size of the pennant itself. So that's what I would think. I would think if it breaks this point right here on the 5-minute chart, it's going to come down to the next one. And that's the most likelihood that I feel like it's going to do because of all these weeks at the top and the slowing momentum, upward. So it's basically, it had 1, 2, 3, 4 times chances to break the top, and it didn't.
Yep. And now it's coming back down to kind of test the bottom, right?
Right. But that doesn't mean nothing. It can still.
You can still test and
gain momentum, right? Yeah, and break. So
right.
If I were to trade the pennant as it is, then you would put a buy stop here or a sell stop below here, and just whichever one picks up, cancel the other one.
All right, so we got our 1, 2, 3s down. Now the next part of the challenge was drawing the boxes. So let's draw the boxes on the chart.
On the chart.
Oh my gosh.
Okay. Well, I would think this is the main box, which is the wobble area. And this would be light, and this would be light.
Okay.
I mean, that's what it looks like to me.
Sure. The only thing I'd add is that yes, this is definitely light. This is normal. This box could go from light to normal if it stays above this and decides to consolidate between here and here. Because like you said earlier, if it does break out of this or come back in, it's going to be easy to fix it, to fix it, right? So it depends on what it wants to do, if it wants to stay in this box, right? But really, your big box would be somewhere right here, where this is your light zones in case it breaks the top. Does that make sense?
Okay.
Your light areas are areas of where it could break and run on you, and so you don't want to be on the wrong position if that happens.
So that's what you would consider being
right.
And so on this one is a little somewhere like this.
Right.
Okay.
That little pop right there, I just took back everything the market took from me. Thank you, market. Market giveth and taketh. Brian, I wanted to answer Brian. So comment real quick. Your comment on Sean talks about the day hour chart trend being current direction, and he talks about market bias. Yeah, Sean does that a lot. So, and I've had to have this conversation quite a bit. When I talk about bias, I probably should change the name if you guys have a better name than that, because it can kind of be confusing. But I don't know of a better word than bias. When I talk about bias, I talk about your personal bias in the market. And where does that change? Where does that change, right? So what's my personal bias? Is it, do I believe that it's going to, am I a buyer, right?
Yeah.
Am I a seller? And where does that change, right? And that does correlate with what the market's doing, but it has no correlation. It has no correlation on what the day is or what the week is, because that's like market structure, right? And that's market structure, where that's going to go. But that doesn't help really to determine by knowing that on the day, we're definitely in an uptrend, right? But knowing that doesn't help to know that you should be buying here or selling here on the 1 and the 5, right?
Right.
Knowing that helps to know where your major zones are and where you should be light and heavy, and light or heavy. But for me, when I talk about bias, is our own personal bias and how to quickly shift that and change our mindset, right? Because if we're stuck in one direction or the other, and if we're stuck in all buys and the market changes, and like right here, it breaks down. And let's say you're like, okay, I'm buying and it breaks down. When does that shift? When does that shift? And again, he uses the word bias. I use the word bias. I would like to change that. So if you guys have an idea of how maybe I could change that and not say bias so that there's not that confusion, that would be.
That's your strategy, isn't it?
Yeah. Well, the word you're looking for is thesis.
Thesis.
That's an idea that you're suggesting.
Perspective.
It's your
Like
individual perspective, not if Sean's going to use bias. Bias and perspective are essentially the same thing, but perspective is personal.
Right. So, but in the market, it's kind of, changing your perspective. Does that have the same term as changing your bias, right? Or same impact, I should say, when I'm trying to say, okay, where does that change? Where does the market change? Now, right here, we're in a consolidation pattern, right? And so it's consolidating. Well, the moment it breaks out, we should change in either direction. We should immediately change, maybe not perspective, because perspective is thought, but I want something a little stronger than that take action. You know what I mean? And action
in some way, it's your thesis. It's what you're saying.
Sure, but a thesis is still something that's unproven, right? I'm talking about now it's proven. Now we have to shift. Do you know what I mean? Okay. Our theory or thesis or our perspective is that it won't cross this line, but the moment it does, we need to shift, right?
Well, that's your backup plan,
right?
But that's the strategy.
I get cool prejudice. Yes. Our prejudice.
Well, but it's true. When you say bias, it makes it sound like confirmation bias, which is kind of a bad thing.
Praxis is not a very common term. So if I say, what's your praxis?
An idea or a perspective or a thesis that you sort of, the direction you expect it to go.
Joseph, if I use the word praxis, then I have to explain what that word means every time I use it. So I'm looking for more of a common word.
Just plan A and plan B.
Plan A, plan B.
Because that's really kind of what it is.
Sure. But I mean, I think bias works other than it's a personal instead of market bias, right? And I think Sean goes after what the market bias is long term. And I look at immediate what my personal bias is. And so that's kind of how I've just stuck with like a personal bias versus market structure. And that's how I've kind of defined it.
Well, see, the bias kind of tells what the larger time frame's doing to me, like hours or 4 hour, whatever. So there's like this pressure to go one way versus whatever it's doing on the smaller time frames.
Mm-hmm.
It may match. But what you're talking about to me is your strategy. You're going to play the shorts, for example, until it hits that point, and then your shorts are wrong for the time frame and the amount of money you're investing in your trade setup this morning. So you switch your strategy to go into buys or whatever. That doesn't really change the bias. Or
it doesn't change the market. Well, it could change the market structure, right? But that's the thing that a lot of traders struggle with is how to identify that the market structure has changed. And so they flipping from I'm a buyer to now I'm a seller, right? And I think that's one of the most fundamental things that a lot of traders struggle with is knowing when to flip, when to change, right? And so that's why I think like through these challenges, I'm particularly today, identifying areas of where that could happen, right? And identifying areas of where your strategy, like you're saying, breaks down, and to be able to identify when that breaks down and it's no longer a valid thing. That's why I talk a lot about plan A, plan B, right? So,
okay, because I always thought that was, as long as let's say you're buying because you're in an uptrend, right?
Mm-hmm.
When your strategy of buying fails in that because you got higher highs and lower lows, is when the low when it goes the other way. When you have lower highs and higher lows, or however that works. Whenever the trend goes from up to going down and it breaks that one point, from that point to the next point is your fix-it zone. And then now you got to switch because the market switched. So your points, like, does that make sense?
How about
easy to see on screen?
Yeah, I mean, I guess it all comes back to, everybody's like all over the place on this. and it's fine. It just means that if you guys are confused and I'm confused, how are we going to teach it? So that nobody's confused.
I'm not confused. I know what you mean.
Yeah, I think everybody knows what I mean because we've explained it, right? So, but I'm just talking about like, I can't count how many times that I've had that same question that Brian said, well, Sean teaches it this way, you teach it this way.
About team or position, because you're either on the buying team or the seller team. You're switching teams, you're switching position.
Sure. But it's not necessarily, the idea is knowing when to switch, right?
You switch teams.
Right. But the thing is knowing when to switch. And so you need to identify that in your pre-trade setup, just like what you're doing, Khalid.
Right. Yeah.
Is identifying when, if you're going to use the team analogy, when do I switch teams? At what point do I switch teams? Right. And this case in point, like in the consolidation on a breakout to the low, you called it, it tested 1, 2, 3. It kind of came up. This could be an exhaustion bar. So now you should have switched teams, for sells and rode this down. Right. Even though it still could be maintaining market structure here. If you think it's still going to climb up, it could touch this point and come back up. But again, it fails if it crosses this right here. And now you should be back into being a seller. And so particularly when you're looking at the 1 and the 5, you can and you should be finding opportunities on both sides inside of 10 minutes, right? Like right this second, you could have been a seller, and then all of a sudden comes down, test this. I want to be a buyer now, right? For a test of right here, and now you're finding opportunities, and that's exactly what I did, and in my trades, I'm a seller, now I'm a buyer, and now I'm out because it stalled, of those trades. And now what am I? You know, you got to keep asking yourself that all the time. And so having an identity crisis, you know,
But does that
I don't know what team I'm on anymore.
well, you know, this is a big candle, but I would still be a seller at this point. If I were to trade, I would be a seller. I think there is a chance. There is room for, you know, a couple of pips here.
Yeah. So I actually, so I was talking with Sean yesterday, and this is a great example. I actually mentioned what Duke said yesterday in our trading. And you know what Sean said? Sean, that Duke. Is he still here? No, he's gone. That's too bad. Because he said something yesterday that got me thinking. And it's a case in point, exactly what we're talking about right today. So widen up this 5-minute chart real quick. I kind of want to explain this a little bit. Give me more history on the 5. Okay, zoom into this move right here.
Let's see your, right there. Okay.
Right there. So this is a really good case in point, right?
You mean here?
You can zoom in a little closer right here. This move right here. All right. So yesterday, Sean and I were overlapping our trading sessions, and I think Duke had the opportunity to see both, right? To kind of look at both, and I was buying right here. I bought right here for a possible continuation of this run. So I was a buyer, and Sean was a seller right here, right? And because it moved against me, I continued to buy in at this action point. I bought in at this action point, and I continued to buy in. Now, this was a pretty big move. Can you measure that move for us, Khalid?
From here to here?
Yeah.
That's like 38 pips.
Yeah. It was about a 35 pip move, right? That I was losing on. And Duke said, well, why are you buying here? Right? Sean's selling. And my short answer was I had to take a second and think, okay, why would Sean sell here? Right? And then I realized that he sells here because he's a counter trend trader.
Yeah.
The thing is that you didn't get to see, and that he told me, because I asked him, I said, why are you selling here? Is that he was taking a bath. He started selling all right here, and he was losing all right here. And then on this move, finally turned on him and he recovered. So the point that I'm trying to say is he recovered and he actually made money right here. The point that I'm trying to say is that he got in and I got in here on buys, but guess what happened for me? Same thing. I bought this move right here, fixed everything, and I got out with money because I'm waiting for that move, right? And so his personal bias was completely different than my personal bias. I was buying, he was selling, but at the end of the day, we both made money.
Yeah.
We both made money, right? And so it's a really great point to be like, what's your personal bias in the market? I was thinking, okay, we got this. We're going to see some more continuation. At some point, I'm like, okay, I know that it's going to turn. I just got caught right on that turn and it never came back. In the 1 minute, it never price cycled back up. It just kind of marched all the way down 30 pips, right? But the moment that it did turn, I was able to capitalize and get out right there and make money. And the same thing with Sean was he was losing, winning. And so it's just how you read the market. And there's many times that you've seen me and or Sean call the market, but then trade it differently than what we call it. So meaning case in point that I called the market saying at some point it's going to turn, and I knew it was going to turn. But guess what? I got caught in buys on the turn. And because I was in buys, I had to look for the opportunity to continue and fixing my trades. But I knew that this turn was going to happen. I was trying to find it, trying to watch it. You just don't know where it's going to happen. And that happens to us all the time, where we're just caught in a direction. We're caught in a direction and we don't know how to get out. And that's the exercise that I'm trying to teach when I teach bias. When do you shift? When does the market shift? When does that shift so that you know when to get out? When is your hard X? When is your soft X? When is the opportunity for you to capitalize on buys? A lot of traders, what'll happen is they'll get into buys. A lot of traders, what happen is if they get into buys like I did, they get into buys, and then all of a sudden it breaks and they sit on their hands and they wait for it to come all the way back up and into profit. Then they hit that X. And that is a fundamental flaw that I see traders doing all the time, is that you don't continue to stack into your trades because they don't have the position to that. So if they get into buys, you have to stack in, right? And then if it does break down, you have to know where's that X and where do I become a fan of being a seller. And to me, it was right there. That was my point. But that all comes to with knowing that, you know what, this was a 30 pip move. It's overextended. The chances of it coming back up at least 50% are now really high. So I'm not necessarily going to flip my position into sells because we're overextended. Coming back 50% is still in play and is valid. And it's not only valid, but it's the next logical move that the market should make. So I'm going to continue to be on team B and not team B and not team S and not team BS. Does that make sense? And so I just wanted to point that out, that everybody views the market differently. And sometimes if you get caught on the wrong side of a move like I did, sometimes it can be in your benefit if you let it, because you can get into multiple positions. However, when you get a 30 pip move, it kind of gets scary. But I'm talking normal markets is more like 10 pip price cycles. That's why we look at our price cycles. That's why we identify that, because if it's 10 plus, what does that tell you, Khalid? Going back to the 1, 2, and 3s. If we measure out our price cycles and we're 10 plus on that price cycle, what does that tell you?
You are at the end of price cycle and you may be going for a second, or it might turn around.
Yeah. So if you have to withstand 3 price cycles, that's 30 pips against you. What does that tell you? Joseph has the answer. So if you'd like to phone a friend, Joseph knows the answer.
Change your position size.
Change your position size. Exactly. But if it's less than 10 pips and we got, we're dealing with 5 to 8 on our price cycle, then you should have normal position size. You're okay. You don't really need to go light. Right. And then if you're 2 to 3 on your price cycles, and this happens more often at the nighttime, then what does that tell you?
You mean three price cycles?
2 to 3 pips.
2 to 3 pips. Oh, I mean, just go to sleep.
That's exactly what it means. It means don't trade it, but if you're stupid enough like me to trade it, that means that I could double up on my position size. So if I'm normally 0.10, I can now be 0.20.
Yeah,
right.
I mean, a small number of pips.
Right. But if I'm normally 0.10 here, my normal, and then I got to be 0.05 here on my position size. And so that's why the pre-trade setup is so vital, because it gives you all the information that you need to start placing trades and entering your trade, right? And that's why I do the 1, 2, 3s, because there's information that you need to take from basic information, right? Trend, what team you're going to be on, so we don't get confused with bias. Are you a buyer or seller, I guess? And then the last one is price cycle. So you understand all of this. It gives you the basic fundamentals. Then now you understand this. Then the next level is, okay, is this normal? So I'd be trading with a 0.10. Is this light? Now I got to go trade with the 0.05, right? So that determines the areas that you shift into normal and light trading, right? And then the last thing that you need to be able to identify is when that breaks down by having a plan A and a plan B. When do you shift, like Josh says, your strategy? When is your strategy fail? And when do you flip it to a new strategy? And that is kind of what the next part of this challenge is to find a chart pattern and to trade it, because generally chart patterns can support your just for lack of a better word, your team, your strategy, right? Or they can demolish it, and you should recognize it to see, okay, this could be a potential support or a potential catastrophic change to my thought process. And that's what chart patterns do a lot of the times. And so by able to recognize it, then you have to put a percentage of it. Okay, how much of this chart pattern do I trust, right? Is it head and shoulders? Is it a head and shoulders that's forming? Is it an M? Is it a W? Right? And as a new trader, don't go crazy with like memorizing 100 different chart patterns. Just pull out 2 or 3 and get good at recognizing those. And I can't tell you which ones to recognize, because that's going to be whatever you decide.
That's your spatial intelligence.
Right. Your special intelligence. I love it.
Spatial.
Oh, spatial.
Yeah.
I like special because I'm like, we're all special. Everybody's special. All right. Does that make sense? Any questions on that? I'm going to go back and look at, see if we do have some questions. But again, let's widen up that 5, because right here, this is like case in point to what I was talking about earlier. Like, let's just widen it all the way out so I can see where we're currently trading. And you can zoom into the current setup right here. Okay, so remember I said if it crosses this, then this is where you should be a fan, right? Unless it comes down across this. And this is exactly what you should be looking at before you should even start trading. Because, and I said it could come up and test this. And we called that before we even placed a trade. We identified those potential moves before we even placed a trade. So that should help us in our trading, because that's exactly what it's doing, right?
Yeah.
And if you're a person, it's, if you know this about yourself and you have to be right, that's just a personality where you have to be right. Then if you have a plan A and a plan B, then you're never wrong.
You're right.
Never wrong. You're always right. It's how you execute those plans that you could be wrong on. All right. Sorry, Khalid, didn't mean to take away from your time, but I felt like it was important to go through that exercise.
Okay, so now it's coming up to test that that area here, that zone, basically. And like you always say, which I really believe, that it's not gonna just go through it before it pulls back a little bit.
Right.
So see what happens here.
Can
And then I would be a seller at this line for quick, profit, for potentially up to this point, like, 3, 4, 5 pips. So I mean, I could throw in a 2-pip sell here, and just for it to pull back. And if it pulls back and I get my profit, I can build more buys. Now we are approaching the light zone, so which means, do you then do you keep your volume the same? You just vary the number of trades, or you change your volume?
So I do change my volume, but then I don't ever change my volume until I look for a reset to zero. Right? I look to get out of my trades. Then if I know I'm in a light area, then I change it, because you can't necessarily change it if you get yourself into a situation where you need to fix your trades. You need to have the same position size that you're fixing a layer stack on, right?
Okay.
And so I look to get out of trades for profit, hopefully. I'm not just exiting out of trades because all of a sudden we're in a light zone. The moment that it enters into a light zone, I look for opportunity to kind of close out of my trades, get a reset to zero, and then I adjust my position size, or if I just, instead of taking 4 trades at a layer, I take 2 trades. So kind of the same thing. Personally, I prefer to reduce my position size because it's easier to me, because when you get to the point where you're not thinking about trading, you're just reacting, you have a tendency to have muscle memory where on a layer, you're just clicking into 4 or 5 trades, and reducing the position size is just one less thing I have to really think about when I'm trading. So for me, I tend to use that tactic, if you will, of just reducing the position size. And I generally just cut it in half or increase it, or double it, depending on what direction
Right.
that I'm going.
Okay. Now, in a situation where we are now, it does have the potential to go break that, the top of at the 5-minute chart and maybe go higher. Do you keep, how many trades would you keep for runners, for a potential runner?
That's a good question. A lot of that varies dependent upon, the variable depends upon if you're in trades, not in trades, looking to just get into trades. Like right this second, I might be fading that candle because it's a larger candle. And I don't really trust it. So I would fade this move. But the question was, when do you keep runners? And this would be a great place to maybe put a few buys on right here for a potential test back to the top. Now, again, and because this is a light area, I would keep it light, right? And if it does decide to break this line and come down, I'd probably stack into more buys all the way down to here. Well, probably personally all the way down to here, and that's where I just close out of everything and take a big bath. But the chances of it doing that and without giving me at least one price cycle up to fix my trades is not high. It does happen. I'm not going to say it won't happen, but I'm cognizant of that. But the chances of it coming all the way down to here without pulling back one price cycle is not high. And if it does do that, then I'm really smacking in the trades, because that's an abnormal candle, and I love trading.
Like in this area here.
Right where? Sorry, where's your mouse?
Where we are now.
Yeah, exactly. So, I don't, this is a pretty big candle. So
it is, yeah.
I'm not taking this with aggression. I'm not like smacking the crap out of it, because it's just slowly moving. If it was a fast momentum move, I would take the opposite of it in a heartbeat. But because it's a slower move and a methodical move down, I'm waiting kind of for an action point or before I jump in and take the and start
So
becoming a buyer.
would you wait for a reversal for a confirmation?
I would in your situation where you have a few trades that you're kind of trying to fix now. I would wait for that confirmation. That confirmation, though, could be if it crosses 50% of this line, it's not your solid confirmation on the one that crosses that. But if it crosses the 50% of this candle, there's a good chance it's going to come up and cross that. And so that would be the confirmation. But if it crosses the top of that candle or fails to cross, then you could see if it fails to cross the 50%, you would definitely take the sell on continuation. But if it fails to cross here, it could just come back a little bit and then go higher. Because I am looking for that reversal, right? That's what the next move that I'm looking for. Reversal off this move. All right. Speaking of challenge 1, did everybody get that? I mean, it was a basic challenge as a level 1, but we spent a lot of time talking about it because it is a fundamental thing that everybody needs to get down, right? Everybody needs to get down is how to look for pre-trade setups and how to identify areas of position shifts, right? Or strategy changers, whatever you want to call them. How to identify that. And then we spent a lot of time on that. But anybody that felt comfortable with that, did anybody take the level 2 challenge of looking for a chart pattern? If you did, just curious if you traded that, if you saw it, you traded it. Maybe not. Does anybody take level 2 challenge?
What I saw was a consolidation, a breakout, and a retest of it, and I took it.
So on here, your consolidation right here.
On the 1 minute chart.
And then a breakout, and then you took the buy right here for a retest. Yeah. That's good.
And it went right up,
that's good.
And when you were talking about with Sean, and you say that he was selling, I could see why, because it had just came out of a small consolidation. And I've noticed Sean play that all the time.
Mm-hmm.
When it comes out of this consolidation, he looks for the retest.
Yeah, that's a strategy that I do all the time too. It's called the first retracement of a breakout.
Yeah.
Right. And so absolutely, like on a consolidation, like that's exactly the right play, right? Start buying into that for a retest. Now, I wouldn't have necessarily expected that it would have shot past this and gone up, but this is the beautiful part about companioning that with the action point, because if you were into buys with 0 take profit, it didn't really give you that stall. It kind of just shot past that, right? And so you could have rode that from here all the way up to here, depending on the action point there. And so that's the nice thing about trading with 0 take profits. All right, so on this 5-minute chart right here, I would anticipate that you would get it to move up about 50%, and that just correlates with that action point kind of right in there. And so to really have an opportunity to trade this, you have to have enough trades right here that where if it comes to this point, you're breaking even, right? And then you decide, depending on the action, if it stalls. But if it doesn't stall and blows right past it, then you're making some good money here. But you need to have enough trades down here in order for it to come up and test the 50% in order for it to be break even. Again, that's why you trade light, because you don't want to stack into an area where you're out of bullets and can't utilize this technique.
It looks like it's consolidating right now. There is a chance it's going to go up to down.
Sure, but it did. If you saw, it did kind of come up with a wick.
It tried, with the wick.
With a wick.
It
right?
still has the potential to go up to test that point.
Right. And so, like I said, you just look for like a 50% retracement of this candle at this point, right? And if it gives you that, which it could have, and it fells that, then it's going to come back down and do that. And so you got to be quick to take it and then recycle.
Yeah.
All right, guys. Cool ass. When do I use my intuition in trading? It's kind of a hard thing to answer because
all the time.
Because it's just a second. I don't really channel my inner intuition. I'm turning it on, turning it off. Right? It's always there. But yeah, Brian, I got to go too. So I think we're going to wrap it up. So it's kind of hard to answer that question, but I'm just going to scan through and see if there's any questions that you guys asked that I didn't get to. A lot of comments here. Looks like, I'm not sure I talked about this. Ash says if a price cycle change, then you have enough bullets, but sometimes when the market is slow and you do normal lots, then it suddenly moves fast, then you've used your bullets when it's slow. Yeah. Generally that's what I'm talking about, like in the evening time, right? If it goes against you and then doesn't come back. But if it's a momentum move in a normal trading area, then most of the times it does come back. It just depends on volatility of the market in the day and what the market's like that day. Like I think yesterday, I had a great day in the market and Sean had a great day in the market. In fact, when I met him at 1 o'clock in the afternoon, he was still trading. And I'm like, that means you're doing really well or you're fixing. And it would just happen to be the latter, where he's just like, I can't lose today. Everything I'm doing is just, he was in tune with the market and in sync with the market. And you just have those days, right? When you're in sync with the market, and you have those days when you're not in sync, and being able to recognize that, and sitting on your hands is a strategy, and it's a technique that most traders don't use as much as they should, right? And we're just waiting for the right moment, or get out of the market altogether and come back when you're in sync with the market. All right. Thank you guys. Looking, Joseph, and reading that comment that you just put in there. You really like that word praxis. I'm gonna have to give it some more thought because you're pushing it. I just don't want to have to decide position. Yeah, exactly. Well, thank you guys for your input, your thoughts, and look forward to doing it all again tomorrow. So we'll see you guys in the morning. Thanks, guys.
You too. Have a great day.
Thank you.